Welcome to the Swing Trading with Cycles channel. It's October 14th, 2023. We're going to cover natural gas today. We talked about a potential false breakdown trade, and in this case, it has failed so far. We're going to cover that, and we're going to talk about what the next move might be, especially looking at the weekly and monthly chart. And so let's start with the monthly chart. We talked about this. We had a period of consolidation. Now we seem to have broken out. And important, we had this, this period and this period where we're basically trading inside the same range. We have since broken above that. We even back tested it from above, and we've survived, right? We may be in month 6 of a new long-term cycle. That's important to realize. But on the weekly, the catch is we've broken above this cluster of consolidation, but we put in this bearish looking candle to close the week on week 26. And so generally what one would expect is some kind of follow through like this. And your real line in the sand, your big bull bear line, is 2.820. That's a long way down from here because we closed at 3.236. Now, if you're trading the futures themselves, remember, every 100 pips is $1,000, right? So the move from 3.236 down to 3 is already $2,400 almost, right? So in terms of stops, you have to understand your risk tolerance, but that is ultimately your kind of your big picture kind of line in the sand, because that would tell you that this is essentially a false breakout of all of this, which would target a move to potentially new lows. That could obviously make a double bottom, but this requires some caution. Now, in some kind of like middle scenario, now the really bull case would be some kind of move like this, catches everybody off sides. More likely we get some kind of consolidation instead of like a flat breakout or sort of a breakdown above. So just be careful of the choppy action. Moving into the daily chart, and then we'll go into lower time frames to look at that false breakdown. We talked about this candle marks the high so far, but really it's this whole thing is the rally. And so we want to keep this whole thing in play. And the first big line in the sand was the low of this candle here, because we tried to break down these lows and we couldn't get follow through, and we reversed higher. So we needed to stay above this low. I posted this on Twitter. So that was 3.225. And if we zoom down to like the 1 hour chart, we can see we did go below that level, and I'll draw that line here, right? So we did break down below that level, right here. Yeah, so if we zoom in on the hourly chart here, we can see that's that key level. So this is that daily candle, that like this whole thing, right? You can see this rally up is what created the wick on that candle. So as we said, we tried to break down these lows and got quite a bit below it actually, but then it reversed again. So this is a false breakdown of all of this stuff. But then it didn't go anywhere. It just meandered and consolidated. And then we tried to break down this low. That's the potential false breakdown I mentioned on Twitter. If you're not following on Twitter, definitely take a look at the pinned comment. So you can see these 2 hourly candles dip below the line, and then this candle makes a higher high, and it actually closes above this low, actually just above this low. But then the next candle consolidates. These are hourly candles, and then we get the drip lower. Now it's entirely possible, like we're still setting up a cluster here of lows, and so this level can become a battleground. Right? So call it 3.225, 3.220 in that neighborhood. We're down here at 3.208. So that's going to be a level to watch. If price could recapture that could trigger a false breakdown. Again, notice that this move here was quite a bit below this cluster of lows. So no reason why this thing couldn't fake, down to here, let's say, for instance. Markets seek liquidity, right? Like imagine there's some cluster of stops here, for instance, in this area. Obviously, this is as we talked about that bull bear line on the weekly, this is the hourly version of it. Okay, so we're going to move on to Boyle and UNG to see equivalent levels, and they probably displayed the same, very similar pattern. So for Boyle, let's look at this daily chart. And again, as I always mention, these things are going to chronically outperform natural gas itself, so just be careful. Yeah, we've just been consolidating for 1, 2, 3, 4, 5 days. So you need to stay above $66, call it, $65.90. That a move below there could open you up to all the way down to like 58, so almost a $10 move down below that. So that could act as some cluster for stops. And I think as we mentioned in the previous video, your target here would be in that $80 range. So a false breakdown below these levels and then potentially works its way up to $80. That's your daily chart. And let's look at UNG to close out. Again, these things are trending. Well, Boyle, I would say, is trending to zero. So interesting. UNG had a red day, whereas Boyle actually was able to close in the green. That's quite the divergence. And so, but same kind of idea. They both have been consolidating, but we get a breakdown for UNG. And again, not to belabor the point, this whole area, like this whole area becomes a candidate for false breakdown. And in the case of UNG, you're targeting around that $8 range. And we'll close out here with a chart of LNG if one were inclined to play natural gas, but not through Boyle or UNG, Cheniere Energy. You can see nice big breakout last week, actually. I mean, look at how, just looking at this chart objectively, not even knowing what it's trading, you can see massive consolidation for like 7, 8, 9 weeks even. So about 8 weeks, right? Because this was a week 10 top and this is a week 18 bottom. And now, boom, nice breakout above this cluster. So now you're really going to want to stay above, what is that? $170.58. And we're up here at 176. So that's obviously a ways down, but this thing is moving to new all-time highs. That's always nice because there's no resistance. There aren't people trapped trying to get out, creating selling pressure. This is your monthly chart. Ooh, this looks nice, actually. This looks pretty nice. And previous all-time highs of 182. So still like $6 of upside, just to previous all-time highs. This thing looks like it has all the features of something that's going to break out. So that is really nice. And on the daily chart, let's see, are we like late in a daily cycle? Probably not. So this is nice. This is actually a good opportunity. So, I mean, you can see here, we just made an important low here on the daily, which means it's probably a daily cycle low. And now we're on day 3, 4, 5, 6, 7. This is a very bullish setup here. And we're going to close it out with that. Thanks for watching.